Hello, my name is Brian Shannon. I'm an instructor at the MarketWise Trading School in Broomfield, Colorado. I also write the Wise Guide. The Wise Guide is an online daily newsletter found at marketwise.com. I would encourage all you to go there and take a look at that. There's a button there where you can sign up for a 2-week free trial to that service. Each day on the service, what I do is try and give the reader a feel for what's moving the market that day and a couple ideas as far as looking at two different stocks on three different time frames, just strictly a technical basis, and looking for a tradable opportunity for that day. What I'm going to do right now is kind of show you some of the analysis that goes into the pre-market opening look so we can get a feel for some stocks that do have a money-making opportunity. What I'm going to do right now is direct you to the screen. And you'll see that I've got on here a chart for a daily chart, that is, of Cell Therapeutics. Cell Therapeutics on this daily chart is above its 10, 20, and 50-day moving averages. I like to use moving averages. It's something I talk about during the technical analysis class because really they're the best representation there is of what the actual trend is. Now, when I'm looking at a daily chart, the way I like to view it is as I see the 10-day moving average representing the short-term trend, the 20-day moving average representing the intermediate term, and the 50-day moving average representing the longer-term trend on this daily chart. So you can see clearly from April to really mid-August, the stock was in a pretty good downtrend. The 10-day, 20, and 50-day moving average were all trending lower. The 10 was below the 20 was below the 50. Then as we had this accumulation phase going right in here where the stock is crossing back and forth between above and below those moving averages, it tells you there's really indecision about the stock and no clear trend. So what we're looking at now, that the stock looks like it's perhaps ready to break out. It's above all these moving averages, and the moving averages are heading higher. So looking at a daily chart, we've got a stock that looks like it has the potential to be entering a new uptrend. What we want to do now is take a closer look at that action, and we'll do that by looking at an hourly chart. Each bar on this chart now represents 1 hour worth of trading. There's 45 days represented here on this hourly chart. You can see again I have some moving averages here. Before I get to the shorter term moving averages, I'll just direct you to the green and the black moving averages. These two moving averages are the 65-hour moving average and the 130-hour moving average. You can see that the 65-hour moving average is above the longer term 130-hour moving average. What these two moving averages represent are the 10 and 20-day moving average from the daily chart. Really, that's the most important time frames, that is trends that a short-term trader wants to be aware of when focusing on the shorter term time frames. So here on this 10 period moving average, actually it's a 65 period moving average, but with 6.5 hours in each day of trading, a 65-hour moving average actually represents the 10-day moving average. Therefore, we also see that the 130-hour moving average is representative of the 20-day moving average. So you can see the 10 is above the 20 and they're both heading higher. That's a positive indication for this stock. What you also see is that yesterday afternoon, the stock broke out on heavy volume right in here. It broke past this little level of resistance right in here, right about 535. So looking at that, it looks like the buyers are starting to get a little bit more aggressive on this stock. We do have what's beginning to look like an uptrend. An uptrend, again, is defined by higher highs and higher lows. So if we look at it, we can see that we definitely have these higher lows. We have some higher highs, and now that the market's broken past a level of pretty good resistance, it should be assumed, because one of the basics of technical analysis is that markets trend, and a trending stock will continue to move in that direction until it meets an equal or opposite or greater opposite force, kind of, going back to Newton's law of motion. A trend once established is more likely to continue than reverse. That's one of the basics of technical analysis and why we look for trending stocks. Because if we can get in early on what looks like a developing trend, going back to the daily chart, you can see there's not a lot of resistance. The potential resistance for this stock right now is found in a few levels. Right here, we've got a little bit of resistance at about $5.80. And then up here at about $7.30, and really this would make a great upside target. So our upside potential is about 6 to 680 per share. So percentage-wise, if you look at it that way, anywhere from 10 to 15% if we get 50 cents to $1.50. So what I'm going to do is skip ahead one more time frame, and now we're looking at these, each bar representing 10 minutes worth of data. These 10-minute bars encompass about 12 days worth of trading. Again, I've got three moving averages on here. These happen to be the 20, the 50, and the 100 period moving average. Again, looking at three moving averages on a chart, each of different length, the shorter term moving average is always going to follow a little bit more closely to the price action. The intermediate term and then the longer term is going to be less responsive because it's taking in greater amounts of data that's averaging out over time. So you can see here again that yesterday afternoon, and let me just draw a little trend line on here, we broke past this little level of resistance for the stock. Resistance once broken tends to act as support. Here you can see that the buying pressure was building underneath the market. As the buyers became more aggressive, the stock had that upward slope to it below. That's a clue that something's going on here. Now later in the day we saw this big volume breakout past this level. So what we're going to do is we're going to look for a continuation of this trend higher. What I want to do is look at this when it opens today and see if it can open somewhere within this range. And what we'll do is we'll buy some stock. We'll put an initial protective stop really right under this 520 level. So our risk is defined right from the beginning. And it's very important to point out what we're actually trying to do is, we're trying to establish a plan before the market actually opens. By having a plan in place, it allows us to remove emotion from our decision-making process. Because as I'm sure many of you are aware, when you make emotional decisions, you tend to be wrong a lot more than if you had actually sat down, thought the trade out, and put some time into making a logical plan of execution. So what we're looking at again from the larger time frames, we're looking at a price target of about $5.80 up towards really the $7 level would be our ideal target. But that's where we're going to look for potential resistance. And that's an important concept is, you look at a chart and you say, well, there's resistance. Resistance is only an area that, we only know it's resistance after the fact. Until it's been met and the stock turns away from a level, then it did act as resistance. So that's, a potential level of resistance is up near $5.80 and then up near $7 a share. So in order to do that, to get that prize, basically, what we're looking at is hopefully we can buy the stock between $5.35 or $5.30, $5.40 a share. If we can buy it in here, our risk is going to be about 20 cents a share. That's what we're ideally, that's what our risk is going to be. If we're wrong, we're only going to risk about 20 cents a share. If we're right, we're looking for at least 40 cents of upside to $5.80. But if the market can continue higher and go up to that $7 level, then we'll have a much bigger target, obviously. That's $1.60, and that gives us a much better potential risk to reward ratio. And really, that's what we want to ideally look for, is a low risk place to enter a trend or what looks like is turning into the development of a trend, and then continue to ride that trend until the market tells us that the short-term trend has exhausted itself. And we're going to do that by looking at a 5-minute chart. Here again, I'm just drilling down to shorter and shorter time frames so we can get a closer look at the action. Each time I go down on this little chart, you can see I've got these tabs set up here where there's a daily chart, hourly, 10-minute, 5-minute, and then a 2-minute chart. Each bar on here represents 2 minutes worth of data. So we can start to see these levels a little bit more clearly. You can see that support at $5.20 a share, and you can see where the volume started to come into the stock right in here, and then it started moving higher a little bit later in the day. So what I want to do is, now that we've got a potential trade set up, what I'm going to do is come back to this as the market opens. We're going to see how the stock opens. Hopefully we can enter this trade based on what the market gives us this day, and then we'll continue to manage the trade from there. And we'll talk about a couple of more concepts at that time as well. So we'll be back when the market opens. Okay, we're back. The market is open, And we've made our plan. Now it's time to plan our trade. So let's take a look at CTIC. You can see that there are some bids coming in here. I'm going to start out real quickly, get aggressive, and go ahead and try and take 1,000 shares at $5.40. You can see I bought 500 shares there at my order details down below, and now I've got the inside bid. I'm bidding 500 shares for $5.40. The market did just open, and it looks like we've got a little bit of continuation from yesterday's strength in shares of CTIC. Ideally, I would have liked to purchase a little bit down near that $5.30 opening, but you've got to be a little bit flexible with your plan and allow the trade, allow the market to tell you what to do at different times. Okay, now we've just gotten filled on the rest of our 1,000 share order. Right now we're long 1,000 shares of CTIC at $5.40. As we said, one of the keys to a successful trade is to plan out all potential scenarios. Our potential scenario is we're going to either win, lose, or draw on this trade. Hopefully we're going to have a winner here, but we got long 1,000 shares. It is possible that we'll scale into a little bit more, lower our cost basis, and we're not averaging down in a trade. We're buying within a range that we had already pre-established. Now, again, our risk was down below $5.20. If we take a look at the action on the 10-minute chart, you see where the market did break past resistance. That resistance tends to act as support once broken. So what I'm going to do now is I'm going to go ahead and bid for another 500 shares. As you can see, I'm loading that up on my level 2. And I'm going to show a bid for only 100 shares, but I'm actually going to be bidding for 500 shares using the reserve feature on ARCA. So I'm going to join Cincinnati Stock Exchange, that's Island, and go ahead and bid for 500 shares. So we can see in my order details down below, it says buy 500 shares of CTIC at $5.31 on ARCA. And again, it's a reserve order. You can see where it says show 100 shares just because I opened that up. I'm showing 100 shares, but I'm actually bidding for 500 shares. Now, Knight just stepped in. Knight's a bidder for 1,000 shares at $5.35, and we've got some trades going off on the offer right now. So what I want to do right now, before we go any further, we're going to leave that in there. But I'm going to go ahead and I'm going to set a stop on this trade. I've got 1,000 shares that I'm long, so I'm going to go ahead and set a stop limit. I'm going to set a stop price of $5.18. So I'm going to allow it to drop just a little bit below that support, and I'm going to give it room down to, let's say, $5.09. I'm going to give this 9 cents to work just in case there's a lack of liquidity at that time. So I'm going to open up my order positions again, my order details in here, and you're going to see that I'm going to send this order to sell 1,000 shares with a stop price at $5.18 with a limit at $5.09. So now that's in there. We don't really have to worry about that trade so much now because we're in it. We're going to let the market decide what's the right course of action for this stock. So right now, assuming that the stock doesn't get halted and gap down, worst case scenario, we're going to lose about $200 or so. If, however, the market does what we're hoping it to do, we're looking for a move up to test at least this high right here near $5.90, possibly even get up to $7.15. So we've got about 50 cents of upside, 20 cents of downside. That gives us a potential, initial risk-reward ratio of about 2.5 to 1, which I think is sufficient for this type of trade. So I'm going to just pause this again, and as the market starts moving around a little bit more, I'm going to come back and we'll continue to review this trade. Okay, we're back again, and the market, you can see the market is up a little bit over here on the right-hand side. You see the S&P futures are ticking up, and fortunately our CTIC is starting to work a little bit as well. What I want to do right now is kind of show you a price target I had just come up with while I was away, and I had seen this little symmetrical triangle developing on the 10-minute chart. This triangle starts at $4.80 with a peak up at $5.40. So that's a 60 cents. The height of this pattern is 60 cents. If we add 60 cents to the breakout point at $5.30 yesterday, we look for an initial price target of $5.90 a share. So what I'm going to do is I'm going to enter an order. It's a little bit early, but I'm going to enter an order to sell 500 shares of our position up at $5.90. That way, what we're going to do is going to allow the market to give us us, you know, a little bit of potential profit initially. So we're dealing from this stock with from a position of strength. What I'm going to do right now is, if we go back to our order details, you can still see we have 2 orders working. To buy at 531. That's not going to get filled at this point. We're going to cancel that. We're also going to cancel our stop because now the risk-reward parameters have changed because we are in a profitable position. And I'm actually going to put this initial sale at $5.85. I'm going to go just 5 cents below what our target was, try and be a little bit conservative, and try and lock in some gains on this stock initially, so that, again, we're dealing from a position of strength. Excuse me. Part of having a plan is also being able to that I had a stop limit rather than a limit order. But part of you know, a successful trade is being flexible with your plan and reassessing market conditions. So we're going to try and, again, take a little bit of profit out of this. I'm going to enter this order. You can see the order is in there. I'm only showing a portion of my of my order to the market. And if we look up at 85 cents, we can see that my archipelago order is only reflecting an order for 100 shares rather than the full 500 shares. We don't want to basically show our hand to the market. So that order's in there. I'm again just going to conserve space on this disk and put it to pause, and we'll come back and monitor the trade some more.